Hello, good day, everyone. Welcome to today's PU Prams webinars. And as you guys can see on the screen here, today we're going to talk about trends. Yeah, I'm a bit regrets that we only come up with this topic at this period of time. But yeah, too bad because we designed a series of educational webinars, right? Yeah, and today is this topic. But hi. But I want to say this as you have, because I'm not sure your trading experience here with all of you guys here. But you if you hold a trading experience longer than 4 to 5 years, perhaps you can tell the markets that we trade today is so different than let's say 3 to 5 years ago. Okay, I hope that you agree with me. Okay, so nowadays the trend is so hard to catch, especially after Donald Trump returns to the White House, right? So yeah, it's a little bit. I would say it's a little bit too late, to come up with this topic. But I hope that you can get something out from here at the end of today's sessions, and then hopefully it will help you to enhance your upcoming or this following trading. Okay, hopefully you'll be able to learn how to analyze better with trends, and then you can hold a positions for longer to capture bigger movements, and then of course hopefully it will result a better profits or better returns on your day in day out trading. Okay, so yeah, this is the topics that we're gonna cover today. What is trends? What types of trends? And then me, I will also share to you guys my mistake. Okay, when before I come across all this trend analysis. All right, and then yeah, so the at the end, I will also open up the Q&A sessions. If you have any questions for me, you can type it out later. Okay, and then let's see if I'll be able to answer all of the questions. Now, so first of all, this quick question to every one of you here. Have you ever experienced this? Okay, you buy at the bottom. Okay, you thought this is already at the bottom, and then the price actually falls further. Of course, I bet if you have been trading long enough, this will definitely happen. Okay. Or if you sell at the top, you thought that is too much. Okay. You thought, like last time, if trading with gold and then gold like break 2K, break 3K, break 4K, you think too much. And the trend is just too steep. And you think it's no longer going to be sustainable. And then at one point it will just crash. And after you sell it, after you enter short positions, the price keep rising. Okay, I bet it happens to you, right? And thirdly, you close a winning trade too early, and then the market rallies another 500 pips, 100 pips. But that is okay. Okay, that is okay to me. Because after I learned, I have been I have like some 10 years of trading experience. I learned that uh you rather close your positions too early rather than you just let it float. Okay, because the one thing that is one of our biggest enemy would be the greed. Okay, as a human being, always we become so greedy at one point when the trend is flowing in our favorable directions, and then yeah, we turn out to be too greedy. It happens to me before, when I just keep on tuning my TP, and I got nothing. Yeah, it's happened to me before. Okay, so yeah, C to me is okay. Close the winning trades too early, but of course, if it happens too many times to you, is something that you want to solve. Okay, why is it? Okay, how can you become more precise? Okay, in your every trade. Okay, now another questions for you guys. Why do you think this happened? Okay, just because you are bad luck, you already got it correct, and then just that in bad luck, the trend didn't follow what you want, or wrong entry. Okay, it could be. Okay, it could be because sometimes we like to chase in, right, for more sentiments hits, and then we just close two eyes and then opens directions, and then after we open, after we hold our positions, we become so regretful. Okay, it happens. Okay, you are not the You are not lonely. Okay, this happens to many people. All right, and yeah, market manipulations. I cannot say this is bullshit. Okay, it happens. Okay, because us is just like a small potato in the markets. We are trading against, or not to say against, we are trading alongside with so many institutions, okay, from Wall Street, from the Euro, from Asia, so many big banks, right? Goldman Sachs, JP Morgans, all right. Of course, their order often can somehow manipulates the market. Okay, and of course, you guys maybe come across some of the movies that demonstrate to us like how the big shots able to use their order, buy, sells, and manipulates the markets. It happens. So analyzing the trend in the markets is actually just to also somehow let us to gauge or or make analysis on like how the market maker trades. Okay, how this big player, the institution, trades, so that we can ride on the same trends together. Then we can make profits. If we trade against them, okay, how can we win? Irregardless like how big your position is, unless you're telling me you are a billionaire, okay, that's the different story, which is not common, not the majority of us here. Okay, irregardless of what size you are trading, we cannot manipulate the market, right? So yeah, we hope that when we have like a thorough, a very precise trend analysis, we're able to trade alongside with these institutions, then we can make money along the way. Okay, trading against the trend, number D, right? This is what I've been saying. So if we trade against the market maker, okay, we trade against the institutions. Of course, we are now trading against the trend because they are the trend itself, right? So most of the time when we make losses, it is because of this. We are trading against the trend, and somehow at one point, okay, we just want to be the smartest guy along the street, or the smartest trader in the markets. Okay, so we want to be the first one to sell at the top, we want to be the first one to buy at the bottoms, and this is this gonna we're gonna learn big lesson from this. Okay, we're gonna pay a lot from this. Okay, this is when we don't trust the trend and we try to trade against the trend. Okay. Now, this is the quote for you guys. Most traders focus on finding the perfect entry. Is there any? Okay, you imagine that we are trading with millions of people, millions of traders out there. Okay, even if you want to talk about like institutions, there are like more than 10, 20 of big institutions out there. And then sometimes we have to trade with the central bank as well. We have to trade with the government. Okay, for example, recently, if you trade with the Japanese yen, right, you are trading with the central bank. Okay, so many big player out there. Okay, how can we have like precise enough analysis that we can find the perfect entry, and then we can TP at the best ever price level? Okay, it will just never happen. Okay, so focus on identifying the trend. We could just enter the trend much later than most of the people, but if you write the correct trend, we'll still be able to profit. And of course, if you want to exit early, it's fine, at least as long as you can make profits, right? So yeah, there's no perfect entry. You don't you don't just really want to focus on this finding the best perfect support and resistance line, and also the entry point. Okay, is almost impossible unless you are Elon Musk, and then you'll be able to like or Donald Trump. Okay, you can manipulate the market so much, then of course you can get the perfect entry point and exit point. Okay. Now, what is a trend? Trend is just a general directions of which a market move over a period of time. Okay, so yeah, in a nutshell, we have three different types of trend. Just three. Okay, it just goes up. If it's not going up, go sideways. If it's not sideways, it go down. Okay, just three types. So every time when you want to enter a trade, okay, if you start to analyze a one trend of a thing that you are about to trade, you just look at it and ask yourself, is this going up? Is this just sideways, no directions, or is this going down? Just three. Okay, as simple as that. How can we justify this is an uptrend? It means that it goes higher high or in higher low. Okay, so I hope that at this point of time, when I think you have enough experience, you'll be able to tell me where is the bottoms of each trend and where is the top of each trend, and then you can kind of identify where is the high, where is the high. Okay, you can circle it out, and then you tell me yeah, here is like a higher high, here is a higher low. Okay, then this is an uptrend. Okay, and sideways trend, very typical if you have been trading with BTC and Ethereum. Okay, this is like a textbook sideways trend. Okay, if you want, you can pull up the chart of the weekly, not the weekly, the past week of BTC trend, Ethereum trend. Okay, this is the very textbook sideways trend. Okay, downtrend, of course, this will be like a total opposites of the uptrend, which means that you have lower high and lower low. As simple as that. Okay, so every time when you want to place a trade, open your chart, and then before you place a trade, ask yourself this question: is this going uptrend, sideways, or downtrend? We don't want to be the smartest trader in the market. Okay, you thought that oh, this is already at a peak, or why not I just sell here? And then what if the just as mild corrections and then goes even higher? All right. I bet that this happens to you, or you think that this is already at the bottom. Here, like it cannot go any lower, and then you enter a buy position here and it just crash further down. Okay, it happens to you, right? It happens to me, it happens to most of the people. So we don't want to do that. We want to acknowledge the trends, and then we just trade alongside the trend. If we make mistake, it shouldn't be too off from. I mean, if you trade long enough, okay, you'll be able to make more profits than make losses in the market. Right. So why trend exists? So there are multiple factors that are going to create a trend. Of course, I already said early, it was because of the market maker. But what drives the market maker to trade in the markets? Okay, what are the factor? I know categorize it into four big group. Okay, one is definitely is the economy itself. Of course, market is also equivalent to the economy, right? So a lot of economic data that are going to shape or drive the price actions of most of the assets that we trade day in day out. Of course, non-farm payroll. If you have been trading last Friday, of course it will be a very crazy one. No one thought that the non-farm payroll will come so bad. Okay. Yeah, and then if you have been trading with gold and dollar, right, you can, yeah, I mean, you have to, I mean, you're supposed to remember what happened last Friday. And today we got a US CPI reading, right? So yeah, inflation, not only CPI, we have PCE also for the US or the US dollar denominated stuff. Okay, we're talking about inflation and GDP. Tomorrow we're gonna have the UK GDP and also interest rate. This is also like a big thing. Okay, but most of the central bank, we don't have the August interest rate decisions because they are enjoying the summer. Most of the central banks will have their interest rate decisions in December. Okay, so this change in number, the market expectations all shape the directions for the markets, which is create a trend. Okay, apart from that, central banks, like I say, yeah, they are making them. They are the ones to tailoring the rate decisions. Okay, and then if you talk about the BOJ, they intervenes directly by buying and selling the Japanese yen and also the US dollar, which they did, in the recent markets. Okay, so the central bank definitely play a big part. Okay, if you are talking about trading with gold and also forex. Right. Third is the market sentiments, is people like the institutions and also people like us. Okay, of course, we play a very, very minor part in this. Market sentiments, often we refer to the big institutions and also Oh, I think I omitted to change the point here. I'm so sorry. But yeah, market sentiments basically is because of the institutions, the big traders, and also people like us. okay, and also geopolitical events. Okay, of course, if you have been trading gold, if you have been trading the dollars, if you have been trading crude oil, of course, now, Iran's and President Trump's and the developments of the Middle East geopolitical issues does play a big part, okay, on the things that we're trading now. Okay, trade dispute, like in the past, China and US, they have this trade war. Often it will just have, drive the directions for the gold, drive the directions for Wall Street, and also the US dollar and domestic politics. Okay, if you have some chaotic thing happens, like I can remember any recent political issue. Maybe I think last year Korea, the Korean president was toppled, right? Things like that, sanctions. They were talking about Russia. Okay, Russia oil export was sanctions when they started the war with Ukraine. So it does definitely gonna affect the crude oil price. Okay, so all this, right, they are the key player in the markets that can create trend. So by learning how to read economic data, by learning how to the decode the central bank's tone when they give press conference or they come up with any policy statement. Okay, if we're able to decode their directions good enough, we're able to analyze the trend better. Okay, and also the market sentiments. How can we gauge the market sentiment through some of the thing? If you, for example, if you are trading with the forex pairing, okay, and then if you want to look at the dollars, and then this is something that we can gauge the market sentiments, okay, by looking at DXY, and we apply it with some of the major pairing. Or if you are trading with let's say Wall Street indexes or just some big counter, we can look at the VIX index, okay, the volatility index for the S&P. Okay, look at the VIX index, and then we try to predict or analyze the market sentiment from that. Okay, and also the geopolitical event, that is very straightforward. If there's any news coming out, okay, just rumors, it will already shape the directions for the market trend. As simple as that. So these are the four categories that I can come out, so that hopefully later after these sessions you can do a bit of your homework. How are you going to master all this so that it's going to help you to analyze the trends in the future when you want to trade yourself, right? And yeah, it is pretty much just, at the end of the day, it's just talking about demand and supply. Okay, what's going to drive the demand? What's going to drive the supply? If the interest rate is going up, people demand for more currency, and then the currency appreciates, things like that. Okay, if if there's a war, okay, less supply for the crude oil, more demand for the crude oil, then the crude oil price goes up. So you're gonna see the WTI crude goes up, the Brent crude goes up. Okay, so at the end of the day, we are just talking about demand and supply. So this is the key. Okay, irregardless of what's at the player. So when you're decoding something, you just ask yourself, is this going to cause the demand for this particular asset goes up or go down? Or if this thing happens, it will just affect the supply, goes up or go down. All right. So I just give you an example. Recently, people start to reports that the US strategic crude reserve has gone down to the lowest level since 1983. Okay, so this is the news in the market. So imagine that when people start to report this news, what will happen to the crude oil demand? Okay, is the US government going to buy more oil now at this price level to refill the strategic reserve, or they just do nothing and then keep on using the reserve crude? Okay, so this is the question mark, and you think about this yourself. And if you are keen to trade the crude oil after these sessions, this is your homework. Okay, go to find out this news, and then see what are the different analysts talk about this, and you can come up with your own trading decisions, okay, if you are keen to trade on the crude oil, right? Thirdly, biggest trade mistake, trying to predict the top and the bottom, which is what I did in the past. I want to be the smartest guys in the world. I want to be the smartest trader in the markets. I always thought that here is already the peak. I want to short here. And what's happened next? The momentum so good, it just go further up, and then I hit my stop loss. Or I regard this is already at the bottoms, it cannot be any lower than this, and then I try to catch a rebound. I want to be the first one to enter the long positions, and then just crash and just lose more money, right? It just happened before. To me, I'm not sure about you. I hope that you can echo. You feel the same way as I feel in the past, okay, not in the future, okay, especially after these sessions. Okay, I think this is some of the lessons that everyone's going to experience somehow any point of time when we trade in the markets, okay? So we don't try to be the smartest guy in the world, because hardly we can be. Unless you tell me you are working in Wall Street, you're working with the institution. Of course, you can be, right? So retail traders sell because the price is too high, right? Most of the people are going to think this way. The price is too high now. This is ridiculous. It cannot be true. Sell now. Okay, if you have this thought with BTCs, you're gonna burn your hand, right? And professional trader, what they do, buy because there's a trend, there's a momentum. Just buy until you feel there's no momentum, until there's no higher high and higher low. It turns to be a lower high and lower low. Okay, from here, become like this. Only you stop buying. If it still happen to this way, continue to buy. Okay, same goes to short. Keep on short as long as we have these lower high, lower low patterns. Just stop when it turns to here, then we stop selling. Okay, so this is what the professionals people do. Okay, this is definitely something that I didn't do in the past. So this is what I'm trying to do now, right? Okay, next is first case that I want to ask you guys these questions, okay? I don't want to tell you what asset this is, but just by looking at this chart, okay? It has been like a breakout from this downtrend channel going up. We have this peak, okay? And then this is the bottom, right? This is the very typical higher high and also higher low, right? But suddenly it just eases, okay? It stopped going up, all right? And it started to change, okay? People might thought here, like what I told you, right? There's no longer higher high, there's no more higher low, and can we sell here? You think can we sell here? All right, then it become like this. So this is the chart that I show you, okay? This is the chart I show you, and then suddenly it becomes sideways, no range. But what happened next? Boom. Okay, so this is the gold chart in 2021. And I can frankly tell you that I lose a lot of money from here because this is BTC, sorry. This is the BTC since 2021. Okay. But for the gold, if you have been trading, I think in 2023 to 2024, this was when the gold price becomes so crazy. I burn my hand because I just become so disbelieved that the gold price shouldn't be that bullish at that time. Okay, so I've been shorting and then I've just burned my money. Okay, so this is what happened with the crypto, with BTC. Early on, you have this higher high, higher low. And then if you just think of you want to be the smartest guy in the world, you start to, short here because there's no, become sideways, there's no range. This is what happened next. Okay, so this is another case for you guys. Lower high, okay, lower high, lower low, okay, lower low, lower low, lower low. Right, now sideways, right, sideways. And then you got thoughts, I want to enter a long position here. Okay, why not? It's already at the bottoms, it's formed this bottoms already. Can you go in? Yeah, if you ask me, of course you can, but would you set a tighter stop loss? Okay, this is my recommendations for you. Okay, my advice is if you want to do something like this, better you can set a tighter stop loss over here. And this is what happened. Okay, After it crash, give you a false hope and then crash further. This is what we call market sense in this, like the trader society, the trader group. Okay, it takes time. It takes you like years to learn in the markets. You have to feel the markets, like try to decode what are the market makers trying to do, what is the market trying to do, and then if you're being fake like this, okay, this is not your fault, but just that you learn, we pay the tuition fees, okay, to the markets. We learn from mistake and then we can become stronger in the future. Okay, so this is the previous trend, right? This is the previous trend, low high and lower low, and then suddenly it turns sideways and thought that the market is reviving from here, stop dropping, and this is what happened, crash to even lower. Okay, if you are a trend trader, if you are you want to hold a trend for longer, okay, you're going to burn over here. But if you set a tight stop loss and then you are satisfied, you are a scalper, of course this is not your topic. Okay, so this is something that we have to learn every day, every year. If you thought that you are so expert when you make a few winning trades within a year, there's things like this going to happen next. Okay, so don't be too, I would say, arrogant. Okay, of course, the time will tell whether or not you are a good trader or a bad trader. Okay, you can make like a very good amount of money in a year, but like the next month, next quarter, you can just lose everything. Okay, it happens. I see this. People around me. Okay, this happens to them. Okay, just that. Yeah, this is in every of my webinars. I always try to tell all the audience, try to learn how to manage your risk before you learn any other thing. Try to protect your trading capitals. Try to learn how to lose before you try to profit. Okay, so yeah, this is something that we have learned. This is like a very typical things happens in the markets. It's not always happens like in our favorable way. Okay, yeah. Now, how are we going to identify trend? Okay, two things that I can recommend you guys. First is the moving averages, okay, with the EMA. Okay, so I hope that you guys already know what is golden cross, what is death cross. Okay, meaning to say, yeah, maybe I'll just share with you guys with the chart. Okay, so we have two lines, right? So we have one we call fast line. Fast line is that they react faster with the trend, but just moved up. Okay, I don't want to go in detail what is the moving averages. Okay, by the name itself, it just moved up. Okay, divide the every session's price. Okay, smooth up, average it so that we don't get this candlestick. Then we can kind of tell the trend. One is we call it fast line. One we call it slow line. Over here, the inputs will be 50 and 200. Okay, if the fast line cross above the slow line, okay, this is, we call it the golden cross. Okay, it means it gives you the bullish signal. Okay, whereas this will be a bearish signals where the slow line cross above the fast line. Okay, but to me, I don't really trust on this too much. But this is for me to double check if I got wrong with the trend. So how I use it is I use a 20 line, okay, 20 EMA, and if the price is above the line here, it means this is an uptrend. So when I try to write the trends, and then it will just tell me double confirmations, where should I exit? Okay, it means that when the price cross the line here, okay, for EMA 20, this is, to me, I will exit. Okay, this is how I check the trend. Okay, and vice versa, if I'm doing short, okay, oh no shit, maybe I go for H4. Okay, vice versa, if I go for short, I will only exit if the price touches the line. Okay, so this is what I do with the EMA. But for you guys, just to give you some textbook knowledge, often by textbook, people will look at the 50 and 200 combinations, and then if the line crosses here, it just gives you a confirmation. Okay, now we are heading to a downtrend. and there's a golden cross, means the fast line cross above the slow line. This means that the price is going up. Okay, so as simple as that. But to me, I just share with you like how I use the moving averages to check the trend, is to see if the asset price is on above the EMA line or below the EMA line. Just that. Okay, and when it touches, this is when I consider to goes up. And of course, this is not the only one single indicator that I use. I will do it with like a raw price analysis, and then later on I will apply the RSI, apply the MACD, and also the moving averages, and I also pull the Fibonacci retracements to double check everything. Okay, this is my practice. Okay, I will always start with daily and then H4, but when I do set my price levels, I look at H1. Okay, entry levels, TP, SL, I look at H1, but when I analyze the trend, I will go with daily and H4. This is my practice I just share with you. Okay, move on. Right. Another thing to double check is the Fibonacci retracement. This is very important, and I'll tell you why. This is, you don't want to make mistake when you do when you want to trade a trend. So okay, for example, like this. Okay, so now this is like the selling trend, right? There's a selling trend, and there's a rebound. Okay, there's a rebound. So it is, you can practice this. You can pull the Fibonacci from the swing high to swing low. Okay, I hope that you can able to tell me this is a swing high, this is a swing low, right? So we always look at the magical 618. This is the magical 618 over here, right? And you can see, despite there's a technical rebound, but it got rejected here. It means that this overall, the gold is still trading in a downtrend. Just to double check, okay? Now, next one is over here. So, if you pull the Fibonacci over here from the swing high to swing low, okay, it has crossed. Okay, this means that it no longer trades in a downtrend, and it has successfully rebound. Okay, but of course now you're gonna ask me like, why is it like you tell me this is already the uptrends, but then later on it got continue to sell down? That is this is what I shared with you way earlier. The markets that we trade nowadays is so different that we trade 3 to 5 years ago. Especially now, there's a lot of market makers in the market. We have the notable Elon Musk, Trump, and now the Iranian government tried to manipulate the crude oil prices. So it's require you to react faster, learn how to decode the market sentiments, and then look at the news. Now the fundamentals is already overtaking the technical. The technical is just to let us to give a ballpark guess, like whether or not this is the uptrend or downtrend, where to put our stop loss and TP. Okay, just like that. And the market is so different from what we're trading now. Okay, so just to share with you, this is where I burned my hand in the past. When I trade with the gold, right? Since 2023, okay, I just become so disbelief, okay, over here, and I will just start to sell. I'll start to sell and then hit my stop loss, and keep on hit my stop loss, because the gold is just keep on going up. And then now, when you become so believe that the gold will always goes up, especially when there's a war outbreak, the market just changed its directions, and just keep on heading down. And now this is the very typical lower high and lower low. But at this point, will you believe about will you believe here? Okay, for me, I will try. That's why I say nowadays the market is so different. I will definitely try here, but when I try, I will try it with a tighter stop loss. Okay, and now I just want to share this also with you. If you pull the Fibonacci retracement from the swing high to swing low now, okay, you'll be, at least I hope that you'll be able to tell me where will be the next key hurdle for the goal. Okay, I hope that you're gonna tell me the answer is at the 618, the magical Fibonacci retracement level. If you now at this point of time already hold a long positions and you enjoy the ride here, and you have been wondering where you're supposed to have your TP, at least consider, okay, it will be somewhere around here. This is not a precise line, but it's rather than a zone, okay? The Fibonacci retracements of 618. Okay, so yeah, this is it, and this is how we use the Fibonacci retracement to check our trend, because overall it has been selling. This is why we check it with the swing high to swing low, and here, if the market will continue to sell, here will be the big hindrance, okay, for the gold to penetrate above, where maybe a high chance of rejections might occur here, and then will continue to sell down. Okay, this is for the gold analysis that I just share with you along the way. Now, yeah, this is the topic that I always repeat: risk management. Can a trend reverse? Yes, definitely. Okay, can you predict every reversal? Sometimes you can, sometimes you cannot. So it depends on you. It depends on your risk appetite, and also depends on you. If you try to be the smartest guy in the world, smarter guys in the market, okay, then you always try to predict. If it's not, you wait until the signal indicates. Okay, if the signals is already there, then you try to trade along the way. Okay, you can enter late, exit earlier, rather than you want to be a fool in the markets. Keep on chasing where is the peak, where is the bottom. Okay, trend can always reverse, and can you predict all the reversal? Hardly. It's very, very hard. Okay, so always put a stop loss, put a TP, and ask yourself, are you comfortable with this position? If you hit the stop loss, are you okay with that? Is the money to you so meaningful to you? Okay, if you earn like 10,000 a month and you're comfortable with losing like 500, that's fine. So if you are just making 3,000 a month, if 500 is a lot to you, yes. So tune your positions, and then you check with the stop loss. When you hit the stop loss, is this a comfortable amount of money that you will be able to lose? If the answer is yes, go ahead. If it's not, tune down your position. Okay, always do the risk management. By saying so, it means that every time you open a position, you always set alongside the TP and stop loss. And when you do so, you think thoroughly. Okay, when you think thoroughly, you make a decision thoroughly, and you don't simply change the stop loss and also the TP. This is how we become a disciplined trader. And trust me, this we're gonna give will be able to help you to trade in the long term. You don't want to burn all your trading capitals in a short period of time. Okay, we want to be a average trader, but we can able to make profits in the long term. Okay, we want to last long in the markets rather than become a superstar for a month and then the next month crash. Okay, we don't want to do that, right? Now, last, the key takeaway for you guys: trend is the market's dominant direction. So we don't trade against the trend. We try to predict and follow the trend. So it's a key for you to able to indicate the higher high, higher low price patterns. Okay, which is like what I show you early on with BTC and gold. Okay, try to learn how to see where's the peak, where's the bottoms, and then you plot it with a higher high or whether it's a lower high, so we can able to tell the market is now trading in an uptrend or a downtrend. Okay, try to trade alongside. All right, trade with the trend, not against it. Okay, you will not have enough bullets, okay, to trade against the trend. You might win 1 or 2 times, but in the long run, I don't think so. Will be able to survive in the markets. Okay, use the market structure first. Okay, the market structure is the 3 trends that I show you now. Early on: uptrend, sideways, downtrend. This is the market structure. Okay, try to do that and wait for the pullback instead of chasing the price. This is where the Fibonacci retracements comes in. Okay, when when you trade in an uptrend, of course, you don't want to chase in because of FOMO. At one point, if it is a very strong uptrend, anyhow, it will have like a pullback. This is where we enter. Okay, when you want to chase in, when you got hit by the FOMO, we wait for the pullback. And it's not like a minor pullback, okay? It has to be a good amount enough to pull back. Then we enter there. Hopefully, we can ride the uptrend or a technical rebound if you want to ride the downtrend. Okay, if there's a downtrend, we just don't chase it to short it. We wait for the first big technical rebound. And if the selling pressure is still there, most of the people thought the asset price will continue to go down. Then this is where you enter at the end of the rebound, and we can short along the way. Okay, and lastly, protect the capital with proper risk management. I think I just stressed enough to you guys, right? Risk management comes first before we learn how to profit from the market. Okay, this is my last quote for you guys. Amateur predicts, pros follow. You want to be the amateur or you want to be the pro? Up to you guys to decide. Okay, here comes to the end of today's sessions. Hope that you guys learned something. Here now will be the Q&A sessions. If you have any questions, you can send it to me with the Q&A or just type it out in the chat box. Let's see if I'll be able to answer your question. Any questions from you guys? How can we use support and resistance with trend? Right. I think when you talk about this, I always do it with the Fibonacci because this is like quite useful. Let me check. Okay. So for example, over here, right? If you pull the Fibonacci from the swing low to swing high, okay, somewhere around here, you can see it often touches at the right. I mean those lines that from the Fibonacci retracements always touches the right price levels, and it hits and reject, hits and rebound, and then things goes on. So this is the first hack that you can use for the Fibonacci retracement. Okay, if you don't want to do so, right? If you don't want to do so, the best is you go all the way back. I think let me try with other okay, so this is a very good example. I suppose for you to tell me where is the support, where is the resistance. Okay, so for this particular trend, will you be able to tell me where is the pivotal levels for the resistance? I hope that you'll be able to tell me it's somewhere around here. Not only that it resists the trend that is stopping from going up. So this is the uptrend, okay? And when it comes to here, the Ethereum is not going up anymore, right? It's suddenly traded sideways. And if you zoom out, okay, previously it touches here 2 times. So the most time it touches one line, it make more meaningful for one price level. Okay, so it touches here 2 times and it stop going up at this point. So can you tell me now at near to 1965 is the resistance for Ethereum? Okay, I hope that your answer is yes. Okay, now let me take away this range bound. Okay, now the second one is over here. Can you tell me here is the support line? Okay, because it touches here 3 times and it stopped dropping and rebound. And previously it got rejected here. Got touch, reject, and then when it goes up, become a support. Okay, so here I will say here 1836 will be the support line for this point of time. Okay, for this point of time. The most it touches at one single price level, it will be a meaningful price levels. And whether or not this is a support or resistance, this depends on what trends you are looking at, whether it's an uptrend or downtrend, all right? So yeah, this is how I practice. I want to look at, I will always find the peak and bottoms, and I will plot it out, and then I join them together so that I can find a very meaningful resistance and support. Okay, and trust me, when you look at it daily, when you look at it H4, when you look at it H1, the price can be different. Okay, the price level can be different. Okay, so Marija asked what time frame I use. So if I want to trade like a big trend, so for example, now I'm sure that at one point the gold will have one big trend. So I will look at it daily, all right? Because when it keeps selling, and then it suddenly stop here, okay, and it form a sort of what we call a formation here. Okay, it has a formation, stop dropping. Okay, so this is one point. And secondly, when I look at it daily and I see, oh, over here, it has already surpassed the previous peak here, I already can tell this is a uptrend. This is a trend reversal. Okay, so now I learn it's no longer downtrend. This is an uptrend now from now onwards. So I will double check with H4. Okay, when I look at it H4, I hope that you also be able to tell me higher high, higher low, right? So is this an uptrend? So this is an uptrend. Okay, so now it's already H4. I already learned that this is the uptrend daily, and I already learned this in an uptrend H4. Now when I try to trade, I will go for H1. Okay, so this is where I find the right price levels to enter. Okay, so yeah. How accurate is QQE? I'm not sure about QQE, so sorry, I cannot answer your question here. I will do my research. Thanks for telling me this, but at this point, I don't use QQE. Any more question, guys? Thank you. Right, so if no further questions, I guess this will be the end of our today's sessions. And once again, thanks for coming. Thanks for your support. I hope that you have a wonderful time trading with PU Prime. Of course, my best wish to you guys is to make more profits in the future rather than losses. Of course, we cannot guarantee 100% win rate, right? I hope everyone here can win more than 60% of your trades, okay? And yeah, see you guys in the next one. Thank you.